Evening, everybody. All right. Hope everybody's having a nice winter evening. Don't have any snow here in Pittsburgh right now, but it's definitely chilly. Okay, tonight we're going to kind of observe the obvious. The obvious is that we've been very indecisive in these markets over the past few weeks. Just slow uptrend, but not with any great force. The Dow down 100 a day back to the T-line, but more importantly, the NASDAQ did get down below the T-line. So we have that evening star signal with the gap down, brought it back up indecisively, and now the decisive candles are starting to head to the south. So that probably tells us we want to be, let's see if I can get rid of these little things. We're starting to see signs where the bears are starting to show a little bit more energy up here. Same scenario on the transportation index. Big down day, indecisive climb, and then bam, taking it back down. So I would be getting myself oriented more towards short positions right now than any long positions. Oops. Interest rates, still not doing anything of any major consequence. The 10-year notes in kind of a big cup and handle telling us that the interest rates aren't going anywhere. And crude oil, here's the, I think this is the February contract, trading right now at $62.89. It was actually down like $2.88 today. So this downtrend in crude oil has one consistent element. They've never really been able to get this back up above the T-line. So there could still be some big sell-off here. We had, or one of the conversations I had with somebody today is somebody said, no, that the crude oil prices could get back down to $30 a barrel. That's impossible. It couldn't get there. One thing about prices can go way to the extreme of where you ever think they could go. I could remember, and I don't think it was that many years ago, maybe 6 or 7 years ago, that crude oil prices had gone all the way up to $50 a barrel. And then in a very short few months, it fell back down to $10 a barrel, where gas prices were, I think, like $89.9 for regular on the gas pumps. So that was after the crude oil prices had gone from like $25 a barrel up to $50, and everybody say, nah, it's going up forever. Barron saying, okay. So prices can go wherever it wants to go before prices reverse. Now, obviously, we don't see everybody out protesting that crude oil prices are going down. It's because of all the speculators, like they did a few years ago. You mean 50 years ago? No, this was about 6 or 7 years ago that crude oil prices went down to $10 a barrel again. Was it 1983? I don't even think it was that long ago, because I thought I was remembering, yeah, 1998 may have been, yeah, that long ago. I thought I was still living out on the west side of Houston. Anyways, but the important factor is, it doesn't really matter where you think crude oil prices could go or where anybody else is thinking it's going to go. What we got here? Just let the charts tell you where it's going. That's the simplest. You don't have to project where prices are going. You just watch to see what the charts are telling you. Somebody check, what year would I have been over there on the west side of Houston? 3, 4, 5. Somebody check 6 or 7 years ago, see where crude oil prices were trading. All right, gold prices also having a hard time getting back up above the 50-day moving average. Yeah, check with Kramer. And silver prices, same scenario. Not able to get back up above the 50-day moving average. Notice what's happening in soybeans. Soybeans has a perfect chart to tell you after they broke through the downtrending resistance level, came back, used it, saw the Morningstar signal right on the 50-day moving average. Very high probability they're taking soybeans back up to the 200-day moving average. Nothing in cotton. I've been short hogs here for a while. Notice once hogs broke down, they haven't been able to get back up above the T-line, and they've kind of broken this support level. Still heading down. I haven't even checked to see what some of the other ones are doing. Cattle down the limit today, and feeder cattle also down the limit today. So yeah, things could be dropping. Crude oil down to $33 a barrel. All right, I thought they went down further than that. What else do we have? The dollar. Whoops. Can't figure out. Dollar still in a slow uptrend, which means the euro is still in a slow downtrend. And I thought there was reports today that England wanted to break away from the European 1998. That long ago? All right. So anyways, nothing major. Nothing seems to be going up with any great enthusiasm on the it looks like wheat could also be doing a J-hook pattern up toward the 200-day moving average. UK never joined the euro? All right, I thought they... Oh, I guess that's right, the British pound. All right. This is what, again, this is what we should be analyzing when we're looking at the market, that we've broken through this resistance level. Now we're starting to see some potential sell signals, which would tell me that if the 50, if they backed off for a week or two, the 50 would be right at the support level. So that might be the area that they're going to start pulling it back. Yeah, and the reason I kind of remember that the crude oil prices went back to around $10 a barrel was because I've got the 55 Thunderbird that I had on the west side of Houston, and I can remember pulling into a gas station. I think I've only got a 10 or 12 gallon tank on the T-Bird, and I filled it up for less than $10. It's like $8.90. And I was thinking to myself, man, these prices have come back down. Wonder how long they're going to stay down here. So anyways, right now with the market in doubt, it's still the patterns that are still working very well. This is why I recommended DXCM today, because it has a perfect J-hook pattern. They were just breaking out through this level. The pumps were broken. That's true, yes. Also, we recommended UIHC, another one that was coming out of a nice J-hook pattern. And notice what it did to break out of the J-hook pattern. After a left-right combo, they gapped up through the resistance level. And so even though it was a good buy on Friday, it was also a good buy today if they opened positive, because that would have told us that we had another leg like this in progress. So there's a good prospect that if this went from 13 to 20, $7, this could go up into the $26 area. And the AX or EXAS, somewhat along the same lines, breaking out of this fry pan bottom. They gapped it up to get there, and then they gapped out of that range. Did a little doji up here, so you look for some profit taking. But after the profit taking, you probably still got a good strong uptrend after this. What was this one? AXS, a slow curve breakout into wave 3, another one to keep an eye on for more upside. Again, if this is practically wave 1 right here, which was about 5 points, this should take you up into the $55 range pretty quick. And what else we got here? All right. And what is this? WRB. Another breakout. Notice how the breakout occurred with a doji sandwich, and what do we expect after a doji sandwich? More upside. Is that true? EXAS up to 28. Let's take a look here. Let's see. He is trading at 28.63. Huh. Let's see. It closed at 28.63. All right. Blue was also a good-looking chart earlier. Did it gap up that much? So this is why you want to observe the obvious. Anytime you see these breakout situations, that tells you there's some enthusiasm coming into them with a great enthusiasm. Oh, ISIS was another one that we've been holding on to ever since it gapped up through this level and did the 45-degree. Now look for more upside. Notice that even though they gapped it up pretty big, our stochastics weren't up in the overbought area. That would be implying that there's still more upside to this. Now, the other side of the coin is if you see a pattern set up and it fails, close out the position. Because we're in these situations because we're expecting the results based upon what the pattern is telling us. So the results should have been that they were breaking this up. This is ACHN. But it did a bearish engulfing signal. That told us that there isn't the bullish enthusiasm. Close out this position. Greg, this is exactly why I have 10 positions on at any one time. Because this one did pull back. This one went up. whoops, this one went up. So, and so I had a decent day, plus I'm short a few positions. I had a decent day to the upside, even though I have something like ACHN. That was 10% of my position. It was off, but I had others offsetting it. So as long as I keep modifying my positioning by closing out the ones that didn't work and rolling over into something else, that I know that every day the probabilities are pretty strong that the majority of my trades are going to work. Is every single one of them going to work? Very rarely do I have a day like that. Having 10 trades that are all working in the same direction is not unusual, but it's not very common. But having 8 positions moving in my direction with 2 against, that's normal. So if I look at the 2 that aren't working, I have to ask myself, is this time to be out of this trade? Or is this just a pullback? Sometimes they're just a pullback. Other times they're a reversal signal. This one pulled back, but wasn't a reversal signal. I'm trying to think of some other ones to illustrate it. So on any given day, I'm going to have a majority of my trades working in the right direction at the right time, because that's the whole basis of the candlestick signals in the first place, is that every time I put on a position, that position has the probabilities going for it based upon its existing pattern or signal that it should be moving in the right direction. Things like, I'm trying to think what ones pulled back today, but they didn't produce a reversal signal. Did scamp, STX, for example, was weak today, but notice the pullback. It wasn't a reversal signal. It was just telling me they're kind of consolidating here on the T-line. Got caught today with all long positions. Roger, okay, let's go backwards. Remember, if you're reading my morning and afternoon comments, it's pretty much saying stay predominantly long, but have some short positions in your portfolio. Why? Number one, we're in the overbought condition. 2, we're trading indecisively in this uptrend. So out of 7,800 trading entities, now folded that, out of 7,800 trading entities out there, right now there's some good long positions and there's some good short positions. So if we know there's some good short positions and we're not too sure of which way the market's going, we shouldn't be all long at this point. Now, over here, yeah, I would say I'd be 8, 9, 10 positions long. But right now, it's telling me, well, we're way up in the overbought condition, and we're starting to see some doubtful signals forming in the forming in this market. There's an evening star signal in the NASDAQ, tried to come back up again. Doji sell-off again. That's telling me the sellers are starting to take control. I wouldn't want to be all long up here. So we do have short positions on that are working very well. CLF has been working very nicely on the short side. We were short here. We covered back up here, a little bit of a profit. But then notice what type of signal we had the next day, that hanging man hammer type signal, and they opened it lower. That told us they weren't going up. It was time to re-short. So that's been working out well. So this is, again, why we want to know what the elements of each signal is. This is one that I'd be going short tomorrow. As a matter of fact, I tried to short or buy some puts right on the close today and was a few seconds too late. But notice the shooting star, and where did this shooting star occur? observe the obvious. Every time it hits the T-line, this came up and is doing kind of a mini scoop pattern. This one you want to be short with the anticipation there could be a slingshot effect to the downside. And we saw it in some of the biggies also. Netflix couldn't get back up above the T-line, started selling off. There's your J-hook pattern. There's your dumpling top. That tells me they could be sending this down quite a bit further. I think Amazon might have had the same type. Well, Amazon, once it got below the T-line, couldn't support it at the 50. They're still heading down somewhere. Do you short, sell short, or put? It all depends on the account, Roger, whether you want to be shorting stock or buying puts. It all depends on what your own trading strategy is. Yeah, I don't know whether they'll get to the 18,000 mark at this point. What was the high right here? Whoops. Doesn't do it on this one. Almost got to the 18,000 and then started selling off, which is usually normal. Once it hits the target everybody's expecting, they start taking profits. TLT, still a cup and handle on the 20-year bonds. Wouldn't be afraid to be buying that one. A few that David L. has pointed out. This one's got a nice slow curve, and where did it break out? Right here at this level and the 200-day moving average. This one you want to be buying. Let's make this chart a little bit smaller. This is kind of that bobble. Came up, hit the resistance level, came back to the T-line area. Now coming up through, I would imagine this one's got a pretty good run to it. VIMC, that's then this one is showing a big bullish engulfing signal. And some of the other charts are showing a big piercing signal. But the, I guess the compelling word here is big. I mean, this was a big signal today. And XLRN, this one broke out on a little cup and handle. This is where you watch, because notice what they did. They took this up big. That's the breakout. That's the shorts covering. Now, if they open positive again after selling off in the later part of the day, you want to be buying. That tells you the profit taking is over. No, ACHN isn't a buy at this point, because we've had a bearish engulfing signal getting up toward the overbought area. That's telling us, no, we don't want to be buying here. They're selling. Even if this started coming back up, it may take it 3 or 4 more days, 5 days, or longer to get back up to this breakout area. With it doing a bearish engulfing signal and closing below the T-line and well below the candle that told us we should be heading for a breakout, that told us it wasn't working. Close out the position. And this is why you don't want to fall in love with a position. You want to let the chart tell you what the market is doing. In this case, the market is selling off on this one. Move on to something else. This should have had a nice breakout. Does open positive mean the previous day's close, or just that you don't want to see the market opening down big, and you don't want to see the stock opening lower? If it's opening lower and the market's trading up a little bit on the open, yeah, you wait to see if it starts trading positive. And you can usually find that out in the first 1, 3, 5, 7 minutes of which way they're planning to take it for the day. CEMP was another one that David L. pointed out. And I don't know why that did that. CEMP. Another doji, little best friend signal, gap up through the resistance. More than likely, this is going to be on a 45 degree on the same trajectory as the trend prior to that consolidation. And JRJC also broke out through this little level, doing a doji sandwich, implying there's going to be more upside. Blue had it, well, I think we did blue. Did we do blue? Blue broke out nicely. Anticipate it could move all the way up into here, this trend analysis, or this trend trajectory, and then do a 45 degree. So that's got more upside. And SanDisk was another one that was showing a kind of a good steady eddy, staying above the T-line, little J-hook pattern. Blue is now 70. Okay, let's see where 70 is. Blue is up that big. Let me see. Blue. Well. This is just great. Well, after all that, I'm not showing where any of the closing prices are. All right, up 45, okay. So this is why you always want to go with the charts. Notice the doji type sandwiches break out. Are you always going to get huge moves? No, if you look at a chart like that, the probabilities are in your favor that you're going to be in an uptrend or a big price move. So these are the type of charts on the short side. When you start seeing setups like this, where they're starting to break down and gapping down, this is MCEP, already moved down pretty good, or MRD. The breakdown here, slow curve, selling off pretty hard. That's the type of charts that we want to be looking for. That's why we reshorted GEOS the other day. Let's make this big enough because it failed the 50. It started selling off. It did a bullish signal. But remember what we need to have a reversal? We need to see a bullish signal and a close above the T-line. Oh, I don't forget. That was, yeah, this one. These aren't ones that you want to trade right now because the move is already in progress. We're looking for the ones that are setting up just like this to get ready. And that's why we were in CLF, because it kept failing here at the T-line and heading lower. And just about, you're probably going to see this one recommended for a short tomorrow. Or I even recommended it. Now, this one will be XOOM. That's a strong reversal signal again right here at the T-line, breaking this level. Probably a lot more downside. No, you can screen for shorts just as easy as you can for longs. The only difference is that you're looking for stocks that are probably in the overbought condition or had the biggest percent price moves to the downside. PEIX. There's that slow curve. This one could be shorted tomorrow. Notice how everything failed up here at the 50 or at the 200, came down to the 50, came back up, failed at the 50, and another strong doji sandwich to the downside. This one could have another big move. Say I want the same as this over here. They're still selling this one off. And HCLP, That one's getting another J-hook pattern to the downside. So U.S. Steel, yes, another one that can be shorted. This is kind of your, remember you have your advanced methods rising or your advanced method falling. Big down day, and for 4 days they couldn't bring it back up to where they could close above this signal, and then they gapped it down and took it lower. That's a continuation pattern to the downside. Yes, and this is, did this one ever execute? CTSH. This one should have been a buy, but then with the close below the T-line, you should have been out of it if you were in it somewhere in here because it was trying to break out and it failed. Remember, approximately 1/3 of the trades that you put on are going to fail. So you can't use that as a personal affront. You've just got to set in your mind before you even put on a trade that any trade you put on, you've got a 30-35% possibility that trade's not going to work. So if you put that fact in your head, then you're not going to have the emotional trauma of saying, oh man, I got killed on this one. You got to say to yourself, all right, this one didn't work. Now go find something that looks like it's going to work. And once again, hopefully you've had 2 or 3, or not 2 or 3, 10 other positions or 9 other positions working in your favor that day. So the loss of 1 or 2 positions isn't going to kill you all that much. First Solar. Yes, that's showing you, observe the obvious. The obvious is they haven't been able to get above this trend channel right here. And now another advanced method falling. More than likely, you're heading down to the next support level. The problem with a good number of these shorts is there's stocks you can't borrow. That's correct. That's going to be up to each individual brokerage firm that if you go in and say, I'd like to borrow or short XYZ, and they say, well, we don't have the stock. That's why when I do my scans, where my scans for long positions are usually 200,000 shares or above, my short positions are usually 400,000 shares or above as far as volume, just for the purpose of knowing that there's enough stock around there that they might be in margin accounts in the brokerage firm you're dealing with so that you can short it. Now, there's 2 alternatives. One, if you really like the position, you can say, can you go find the stock at another brokerage firm? They should do that because brokerage firms have agreements that they can lend stock back and forth to each other, which they don't like to do because, remember, when you buy a stock, it's just going out there and picking it up. When you short a stock, they've got to go find it that you can put in your position or your portfolio, and if they don't have it, they should go and get it from another firm. But again, that's a bunch of hassle just for a trade. They like the trades where all they have to do is execute it and move on to the next one. Or the other alternative is look to see if they trade puts. So if you find something where they don't have puts and they don't have enough volume to go on, remember there's 7,800 trading in these out there. If one short position doesn't have the capabilities of being able to short it, then just move on. There's other positions out there to short. Okay, let me take a look here at all the questions. Do you always wait for a sell signal to get out of a position? Sometimes I don't, depending on these all do. Sometimes if the stock closes below the T-line, and which ones were they? I'm thinking. Oh, darn, there was one that closed on the T line today, and I can't remember which one it was. No, we closed SRS. Well, what's happened here? Well. You don't have to wait for something like this to close. If we know we have a doji right on the T line, what should we see the next day to hold this? We need to see it open positive and trade positive. If it opens and starts trading lower, especially below the low of that previous day, what's that telling us? It tells us the bears are still in control. We close out the position immediately. Can you talk to sell stops versus allow trade to run 4 of 6 positions closed out today on stops? More than likely, if you had 4 out of the 6 positions closed out on stops, that's good. Remember, when you put in your order, if I'm putting in an order and saying, all right, I want to stop out of this position the night before, if I'm looking at this rationally without having to worry about the emotions of being in the trade during the day, saying, all right, if this opens and trades lower, I should be out of this position. When it does, that tells you should be out of the position. What are most people worried about? They're worried about getting stopped out and then it turned right around and taken off without them. And I'm saying most people because that was always me. I said, boy, would I look stupid if they came down and got me and then took off. Well, what I've discovered is, based upon what the signals and patterns look like, it tells me when it's time to be out. And then if it turns around and heads back up and tells me this isn't a signal that's selling off, I can get back in. Do I give up some of my profits? Definitely, but I'd rather give up profits and still make a profit than hold on to losses and have to figure out how to make those back on the next trade somehow. XOMA is in the oversold area. Remember, we're first buying the pattern. And right now the pattern, we're not in the oversold area and we're breaking through the resistance level with a doji shooting star gap down. That tells me they're still selling this one off. No, it doesn't concern me that we're in the oversold area. If you can't borrow, try buying puts. Yes. Placing stops immediately after making the trade has made a big difference for me. And every night I reposition. Good, Cristobal. And that's one of the things that I do. Now, the reason I do that is, used to be before I would just take off and say, all right, things are moving in my direction. I don't have to put a stop. Well, that's what I did on days like this, where it opened lower and started trading lower, and I went off for the afternoon or to lunch, and when I came back, it's trading way up here. When all I had to do was, if I opened here and traded down here, all I had to do is say, if this came back up through today's open, I should be stopping out. But no. Now, the reason I do put stops now is because I tell people the number one rule in I do for trading is that if you're not feeling well, or if you're distracted, if you've got the relatives in the house, if the dog is sick and you're taking care of it, don't trade. There's always going to be more trades out there the next day. Rule number 2 is always have a journal next to your computer, because our mind is very fickle. Remember, if we get a winning trade, what's our mind tell us? We're the smartest things since sliced bread. And if the trade goes bad, what do we tell ourselves? We're never going to do that again. Well, remember, we did that in the first place because our mind was oriented toward that situation. Every time I do a bad trade, or every day, I write down what I did good and what I did bad, because I want to remember what I did good, so that reinforces me doing that same thing the next go around. And I always write down what I did bad, and one of the things I always wrote down was put a stop. Why didn't you put a stop right here when it was trading down here? All you had to do was put a stop in case it came back while you're gone. And the reason I do that is because of our ego. And our ego is we don't want to look stupid. And if we write in our journal, why didn't you put a stop at X, level X today in soybeans? Or why didn't you put a stop at this level in Apple when you knew it shouldn't come back up through there? The more you start writing down in your journal, why didn't you put a stop? And I make it more pronounced, because if I write down, why didn't you put a stop, and then 3 days later I write down, why didn't you put it down a stop in a little darker print with an exclamation mark, and then 2 days later you write down, why didn't you put in a stop in darker print and with 3 exclamation marks, you finally start having to say to yourself, if somebody was reading my journal out in the future and they kept thinking, this guy kept writing down, why didn't you put a stop in? And he wrote it for 7 times in a row. Boy, this guy was an idiot. He wasn't even following his own rules. So that kind of helps you with your own discipline, that what you know you should be doing and you don't do, if you write it down enough times, it's going to start sinking in that you should just go ahead and do it. There's a loud voice in my head that says, get out now with the available profits I have rather than wait for a sell signal. What's a good thing to tell yourself to stay in? What I always tell myself, Marty, is I bought this trade because based on the charts telling me it was time to get in. I'll sell this trade when the charts tell me it's time to get out. Applies to dating as well. Get out while you get a chance. That's true too. How do you put stops on options? You don't do it on options. Now there's what you call a contingency order that you can put in that says if this stock comes back down through $50.48, I want to close out my option trade. Because you're not buying the options because of its price. You're buying the options as a method to buy the stock. That's right. Plan your trade and trade the plan. Okay. Let me see what else I've. Oh, Victor, yes. ANIP. I looked at that a few days ago, or a couple of days ago, as being a good short because of that big signal right there. The bigger the signal, the more compelling there's been a change of investor sentiment. Yes, this one can be shorted on weakness tomorrow. Are you still scanning using stochastics? Yes. One of the scanning techniques is if I'm looking for oversold or if I'm looking for a short position, I'll start with which stocks are in the oversold or overbought condition and which ones had the biggest down move today. Those are the ones that are probably telling you there's a change of investor sentiment in the overbought condition. Then I go to my next scan, which is which stocks had the biggest price move to the downside today in the whole trading universe. And that's where you're going to come across some of these, like this one, that even though you're down toward the oversold area, you had a big percent move to the downside. Now, aren't there going to be a lot of stocks that have a big percent move to the downside? You betcha. But when we could analyze a chart that had a big move to the downside and it did a shooting star on Friday and it failed here at the T-line and it gapped down from that shooting star and it broke this level, those are all compelling reasons to start going short on this. So the scanning process you can set up your scans by using stochastics, the signals, and then sorting by the biggest percent move to the downside. That will take, probably you're going to find the best trades in your first 20 scans that you do. And that takes just a matter of a minute. Then if you flip over to your stocks, your whole trading universe with the biggest percent price moves to the downside, that's probably where within 2 minutes you're going to find the best 4 or 5, 6, 7 of the best trades. So it doesn't take very long to find them. Once you've found them and you've found 7, 8, 10, 12, 15 good shorts, then you start going back through and sorting which ones have the best accumulative or convergence, the more aspects or the more elements that you can put into that analysis to say this is where they failed and they're heading down. Yes, but Ed C, if you're looking for a specific pattern or signal setup, he's got the formula, and he's very generous as far as getting it to you. Okay. All right, let me see if I've gotten all the questions. If you're long, how do you manage a trade like blue, one that gaps way up on the open? You buy it. You buy it based on the pattern. Now, if this had been a straight up move and then it gapped up, that's usually exhaustion at the top, or that enthusiasm at the top. If you see it break out through what you can perceive as being a pretty good resistance level, that tells you you're now in wave 1, wave 2, wave 3. So the gap up is a good sign, knowing where it's occurring. And that's why, again, we've got the training CDs on gaps. And if we want to, I was going to kind of do an impromptu session on Wednesday night, just for members. If we want, we can go through the different different scan, different gap possibilities, or not possibilities, the different scans. Not that I'm getting all my words mixed up. The different elements of scans. No, don't want to use the word scans. The different elements of gaps and how to use them effectively. So if that's something that we want to do on Wednesday night, I'd be glad to do a gap session. All right, I will write down in here, gaps. Okay. All right, with that, Jim, let's go ahead and do the double line. Oh, I've babbled on way past. And let's do a second double line. Okay. All right, fold just back and filled today. Bah, humbug. Nothing that changed the uptrending channel of the J-hook pattern. You just stay long. Oops. Let's see, that's what we were trying to do, is finish the scrolling here. All right, GILD. This one you stay long. You can be buying this one on positive trading tomorrow if it opens positive, the doji sandwich above the 50. EXAS has done a gap up doji in the overbought condition coming out of a fry pan bottom. So we want to see it trade positive. At this point, I wouldn't want to see it come back down below the low of today. That would tell me there's going to be some profit taking, possibly all the way back to the T line. RPRX still in this what I would call a fry pan bottom. Had the potential of breaking out today, but it just didn't get there. So probably still a fry pan bottom. Valero, you stay short on this one. The failure here at the 200, one more time, get away from up there. And not holding at the 50. Looks like there's a wee little teeny gap down here, so there should be some more downside. Dow Chemical, you stay short on this one. There's kind of a blue ice failure. There's a gap down here. It could come back down. Now, Dow obviously is not one of your energetic price movers, just like GE. GE you can stay short, but the percentage move isn't going to be all that great. And Bed Bath & Beyond, nope, Best Buy. Best Buy, you get ready to buy this one on positive trading tomorrow. Bullish engulfing signal. If they bring it back up above the T-line, you want to be buying it. And Citigroup, stay long. That's usually a good sign when the financial stocks are all doing well. That means the market isn't really ready to crater just yet. There's Goldman. This Morgan Stanley. Yeah, they're all still doing well. So that means the market may have just been backing and filling today versus reversing. Cala, nice breakout. Just be careful of the volume on this one, I think. And AGEN, another one that broke out to the upside. This one you can be buying on positive trading tomorrow. ACAD was another one that had a nice J-hook type pattern that you want to stay long. And CSLT, this one be a tougher one. You can be buying this one. Just be aware of the possibility of some profit taking before you get in tomorrow. YRCW, this one is one that has to open positive. If it opens lower tomorrow, you close out the position. And this one may have been a type that if, with the market selling off today and this coming back to the T-line, I may have closed out the position just to be safe in case they were still selling off the market in general. We did gild Facebook. Facebook acted well today. It can still be bought on positive trading, but it definitely wants to stay above, or should stay above the T-line. Cree for a short, yes, you can be going short on this one. Notice once again that when it came down, it had an opportunity to support off the 50, but it failed. Tells us we could be heading down, and if you look at the overall chart, it's telling you you're in a downtrend and it's still in a downtrend. Douglas is coming back to test the T-line. This is one where after a shooting star, you would have opened, or if it opened here and started trading positive, very simple. Put your stop at where it opened. If it came back down through there, that tells us which direction they were taking it. They were more than likely taking it down to the T-line. DDD, you stay short on this one. Notice the trend. It's still in a downtrend, and they are having a hard time getting back up above the T-line. OXE, OXONE, another one you can be going short. It's also failing. Still in a downtrend. Gold's having a hard time going anywhere. Right now, I wouldn't be long or short gold, but more than likely, if it started selling off from here, I'd be going back short again. RRC, stay short. WLL actually did a gap down today in the oversold area. Now, this has gone from 90 down to 35, 33, 32. Just start watching for buy signals on these. They're going to occur, and when they do, everybody's going to start rushing back into them, because what happens when they start selling off positions real big? They oversell them, and they come whipsawing back. What did I just do? FCX, stay short. Las Vegas Sands. stay short. Bank of America held up pretty well today, but it's just an unexciting price movement anymore. It's an institutional trader. And JCPenney you should be out of even on a long-term basis. When we saw that mini scoop pattern failing at the 50, telling you they were taking it down some more. ESI, nothing there to get real excited about until it breaks this downtrending channel. If it came back up through, let's say, the 1050 area, that's where you want to be buying. When you say you are covering a position, does that mean you're getting out of that position? Yes. Yes, usually you cover a short position or you close out a long position. Fran had some activity here in the last couple of days. Look for a doji sandwich. If it opens positive, it's telling us two things. After the kicker signal, you've got a doji sandwich in progress, and your prospect of another big day is extremely good. And if it opens positive, pretty much tells us the 200-day moving average is not going to be acting as a resistance level. It's now going to be a support level. LPX, nice gap up, but I'd be, yeah, you're not in the overbought area. This one you can still buy if it opens positive tomorrow. And ACLS, just stay long, but it needs to stay above the T-line. Shouldn't close below the T-line. Missed my question about trading in retirement accounts. Could you talk about your favorite strategies? I don't do options yet. Best inverse ETF ideas. Strategies for trading VIX. Yeah, if you usually on a retirement account, you've got less flexibility. AGIO, you've got a shooting star. Stay long unless you use the T-line as your stop. But usually on trading accounts, yeah, you want to be a little bit safer. The ETFs are a better way to do it. So you trade the ETFs just like you would stock. BSFT, another one you stay long until you see a sell signal. This is just a selling day and an uptrend. Dog. Oh, the Dow. Yeah, get ready to go long if this market sells off tomorrow, which is the opposite of the Dow movement. And BCEI, all you can do right now is stay short until you see a buy signal. Mobley, you can be buying. That's a good sign. When they consolidate and then take it back up, that means they've gotten the profit takers out of the way. This one you can be buying, especially if it breaks this downtrending channel. I don't know whether I can get this one over here, the Russell. Yeah, that's sold off, and that's usually a signal that tells you that there's going to be some more selling because they took it up and then they reversed it and actually did a little kicker type signal to the downside. TWM. TWM, nothing that I'd get excited about until it gets out of this sideways mode. I think we did Guild, FedEx. FedEx, all you can do is stay long until you see a sell signal. And King. King started badly, came down and tested the T-line. You can still buy this. If you put a buy stop at 17, if it comes up through there, you've got another good wave pattern in progress. Could be up another 5 or 6 points. Build-A-Bear backed off a wee little bit today, but it's still closed up above the T-line. you stay with this one, but it needs to open positive and trade positive to stay in it. And CYTK, another one that has to open positive. If it opens lower, not only has your trajectory disappeared, but they're trading back below the T line. So this has to open positive and trade positive to stay in it. MasterCard also has to open positive and trade positive. And STX, same scenario. This one's trading right back on the T line as a doji, so it has to open positive and start trading positive. Let's see, a few that we haven't done. Nu Skin. That's a good looking chart. Let's make this bigger. Slow curve breakout, stay long. It's at least going to come up here and fill this gap. And XIV, there's nothing there would get me excited one way or the other. I mean, that's flat and nothing that I could get too excited about. Posen, we started picking up some of this today. It backed off, so we definitely want to see this open positive. If it opens lower, it's still caught in this range. It's probably coming back to the T-line, which means you want to be out of it and wait to see what it does at the T-line. TJ Maxx, another one that has to open positive. A doji telling you which way they're going to move it based upon how they open it. So retirement account trading, CJ, just use the same thing, but you're just going to be limited to the type of entities. So those I would be more apt to try to lock yourself into some of the ones that are in steady eddies, like a EPAM or something, that once you get into a steady eddy, you just stay long as it doesn't close below the T-line. Let's see. I don't know offhand, riding the curve of any regional, small-priced regional banks. Just do scans for that. Okay, a few more. ABBV. Getting a little bit sluggish. You had 2 shooting stars. You stay long on this one as long as it stays above the T-line. And Sienna, stay long. That's a good-looking chart with the next prospect. Once they broke through the resistance level, they use the resistance level as support, which means they're going to the next resistance level. MDVN. MDVN, not very exciting. Not a very strong trajectory, but as long as it stays above the T-line right now, you can stay long. If it closed back below the T-line, I'd close out. Did you say this was a profit taking? Why isn't it a bearish engulfing or bearish left-right combo? Because it's not a very big signal. It's more of a kind of spinning top. So it's not a, and it's still trading above the 3 T-line, let alone the T-line. So, I mean, you got to look at it and say, is this a strong reversal signal? There really isn't any selling strength in it today. Blocks, just stay long as this stays above the T-line. ASNS. This one is a case where if you see that strong price move, on a big move like this, I'm more apt to take off at least half the position because you've already got a big percentage move. It looked like it was up over 35% yesterday. If it opens positive, you still got half your position. If it opens lower, you close out the position and wait for it to come back up through this level. Now, in this case where it might have, and it starts fading back off, you close it back out and wait for it to come back up through again. Because once they have a big price move like that, you've got to kind of expect especially right near a major moving average, got to kind of expect there might be some profit taken in that area. And that's where the open of the next day is very important. Now, have they opened it positive, you stay with it, or you could be buying back half the position again. TZA, nothing yet to get real excited about one way or the other, but it might be starting. So you can be buying this if you see weakness in the pre-market futures tomorrow. TPX, PTX, nothing here. It needed to see bullish confirmation. If you're long, don't let it close below the T-line. And WM, the Russell, yeah, it's getting a little bit soggy. Oil keeps going lower. This one you stay long. I would use today's open as your stop, though. SWKS, stay long. Do you see this close below the T-line? Swirl. Oh, the swirl is one of those that it has to open positive. Today I may have closed out half a position if I own this one. But if I owned it, it has to open positive tomorrow to stay in it. In TXTR, just stay long until you see a sell signal. Tazar was backing off, but closed back up above the T-line. This one's very simple. If it opens lower and trades back below the T-line, you close it out at that point. You don't have to wait for the rest of the day. If it opened lower, that means they're still selling it off. Price line right now wouldn't be long or short until I see it move out of the sideways mode. And AEIS, stay long, but I would use today's low as my stop. If it came back through there, it was coming back down to test the T-line. Now, I want to get out when it's going to come back and test the T-line, even though it's not that far away, because it may take, even if it supports at the T-line, may take another 2, 3, 4 days for it to turn around and head back up again. I'll just wait to see what it does. SANM, this one you can be going short on weakness tomorrow. And Tesla, just stay short. I wouldn't short it at this point because you're in the oversold area, but the short was somewhere up in this range, especially on that slow curve that finally gapped down. And BEAV, I wouldn't be long or short this one. And notice the trend is so lethargic. You can stay long if you like to, but it's just not a very exciting trend. Where do you see the volume on your charts? I don't usually have them on here, but I think volume is down here somewhere. No, it's not even on here. I usually don't play with volume that much other than the fact that I want it to be big enough for to get in and out of the trade easily. QIHU, just stay short ever since kind of your little island reversal up here. And so that's about it. All right. We definitely need to see this market open positive and trade positive. If we wake up and see the pre-market futures down 50 or 60 points, you probably want to be closing out some more of your long positions. Let's see. So Lisa. Should one have a squirrel? No, not necessarily. Because at this point, we're in the overbought condition. The anticipation would have been that it was trading, should have been trading higher. So right now, all you could have done to protect yourself really was just make sure it didn't close below the T-line. Okay, with that, everybody have a good evening. We'll see you bright and early in the chat rooms tomorrow. We'll see you then.